Let's speak about Workhorse, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove that fact. And today we're speaking about our favorite company on this channel. So today's video is going to be a little bit different. I think I've given you guys literally all of the most up-to-date information. It's been a crazy week in the market. And so what I want to do in today's video is I actually want to go through, one or two bad articles that have been written about Workhorse, from the bear side of things. I want to provide a bullish argument on the points that they bring up. What I really want to show you guys here is that you should not believe everything that you read or see or listen to by me on YouTube or online in general. I always say you should be able to form your own thoughts and opinions, and that's exactly what I want to demonstrate in today's video. So we're going to read through an article, okay? There is a bearish tone to it, and I want to give counter arguments for all of the points that are brought up, because I want to show you that you can't just take anything on the internet as facts, okay? You have to get your information from numerous sources, and then pile it all together and form your own opinions. So guys, right before we get into the video, can I please ask you to hit that juicy like button? If you're new around here, please hit that juicy red subscribe button and join the family so that Jack will feed me. And drop me a comment down below saying, we love Brian. Brian gets so needy whenever I'm recording a Workhorse video. But please do, if you're new around here, hit that red button. We're trying to get to 50,000 subs, baby. With that being said, into the video. So my friends, this is the first article that I want to go through in today's video. Workhorse, let's pull in the reins. Now, worth noticing, this is from Seeking Alpha, and it's obviously written by one person. So this is just one person's opinion, but it is their job to post these things. And I want to give counter arguments in regards to pretty much everything I can. They're not even necessarily counter arguments, but just give both sides of the story. That is exactly what I want to do in today's video. I mean, I think I have told you guys pretty much everything there possibly is to know about Workhorse at this stage. So instead of, just repeating the same things, so instead of pushing, nothing but good vibes on you, I want to go through a post like this. One that is from the perspective of somebody who is relatively bearish on the company or who thinks they're overvalued. And, I'll just give my arguments. Right before we get into it though, weak hands don't eat, baby. I really hope a lot of you guys were willing to hold through that major dip. Now, I do know that we are still down considerably from the highs. I mean, we're down close to 20%. Friday was a very nice day for us though. Up 12% again. I know I'm buying, baby. But anyway, right, into this article. So summary. Workhorse is a tiny company with some convincing growth catalysts. Those growth catalysts are as strong as they were a few months ago. That's not true straight off the bat, they are stronger. At the same time, the market cap has increased 2400% and the stock looks to have gotten ahead of itself. The upside no longer outweighs the risk. So, everybody's entitled to their own opinions. I don't want to start counter-arguing just yet. Let's get into it. And in respect to the author, when they were $4.99 a share, he wrote an article about them basically, saying that they had a lot of upside potential, but they did carry risk. So I can see why he would, be skeptical now. So fast forward to today, and all of the catalysts for growth remain in place. In fact, an argument could easily be made that the company is in a better shape than it was 3 months ago. An argument couldn't be made. There's no argument for the other side. They're in a much better position than they were a few months ago when that first article was written. We can speak about our improved technology, okay, that literally came out a couple of days ago. Our better range. We can speak about Hitachi. We can speak about Lordstown Motors. We can speak about hiring so many new staff. We can speak about a lot of things. There's no arguing that they're not in a far better position than they were a few months ago, straight off the bat. The stock price has risen dramatically in recent months. Since the run-up began on June 3rd, the stock is up more than 1400%, which is crazy, I will admit it. If you think that is an eye-popping stat, take a look at the change in market cap, very fair as well. Workhorse market cap has increased by 2400% in less than 4 months. That's crazy. Life does look good for the company. However, the only question most of us care about is whether or not life looks good for the stock price. If not, it may now fall into the category of good company, bad stock. Definitely don't think it does. So yeah, this is the market cap compared to price change. It is what it is. Now, so many questions. This is what I really want to speak about first of all. So he does outline it by saying this. I continue to believe that Workhorse has some excellent growth catalysts and operates in a promising niche market. As I mentioned in my most recent article, the company is in its infancy. Debatable, but we'll get into that. And this story is going to take 3 to 5 years to play out. Right off the bat, guys, 3 to 5 years is not a long time. If you're a swing trader, you're probably already out of Workhorse. I mean, most swing traders are going to be happy with a 100% return, and a lot of us would have made that by now with our initial investments. If you're a long-term investor, that's not how this works. 3 to 5 years isn't long. So here is just a sampling of things that may play positively into Workhorse, but come with no guarantees. What percentage of last mile delivery trucks will be EV in the future, and how long will it take for the transition to take hold? Well, I mean, we've a much better idea now than we did a very long time ago. We see things like California banning the sale of new ICE vehicles by 2035. We can expect an awful lot of other states to follow suit. Let's keep in mind who uses last mile delivery. It is in general going to be big retailers. A lot of them have pressure on them to become green. Now we've seen Walmart recently announce that their entire fleet is going green. We know that they're speaking with every big retailer you can imagine. So I think the question is, a very, very large percent of last mile delivery trucks will be EV in the near future, and eventually they all will be. Whether EV credits will disappear in the future does not matter for Workhorse. I knew this point was going to be made up because it's significant for Tesla. In their most recent blowout quarter, it was widely reported that the company would have reported a loss had it not been for the regulatory credit sales. Again, I spoke with Steve Schrader about this, the CFO of the company. These credits are not going to mean pretty much anything to the company for a very long time. Who knows? Maybe 5-10 years down the line they'll mean something, but for the time being, we don't even really need to worry about them. That's why I haven't spoken about them since. They mean very, very little. The UPS partnership. Workhorse had been growing its partnership and recently received a 1,000 vehicle order. While that is promising, UPS also made an order of 10,000 electric delivery trucks from UK-based startup Arrival. UPS has worked side by side with Workhorse for a long time, but it is not married to Workhorse. Only time will tell how much the partnership grows. And that's fair. UPS has a massive fleet. Something like that doesn't worry me. You know, we've worked together for a long time and I expect them to continue working together for a long time. It's fine if you're not the only supplier, and it's fine if other people are getting bigger orders. But again, something like this, something like the USPS contract, that's going to be a snowball effect in my opinion. If you see that a company like the USPS is willing to work with Workhorse on a major scale, I mean a massive scale worth billions and billions of dollars, that's going to encourage a lot of retailers to have more confidence in this company. I'll put it that way. USPS contract, probably the most publicized potential catalyst. Great promise, no guarantees. Completely agree with this point here. At the same time, I do think it's a little bit more complicated than saying great promise, no guarantees. If you read into everybody who's involved right now, I mean, it's looking juicy for Workhorse in my opinion, but it's fair. No guarantees, and I wouldn't say there is. The Lordstown stake. This is definitely a positive, okay? The question is just how much of the current $2.8 billion market cap can Lordstown account for? A significant Workhorse shareholder, Formidable Asset Management, stated the Lordstown stake could be worth up to $1 billion. If that proves true, at the current share price, the rest of Workhorse Group has to prove itself to be worth $1.8 billion. I really don't get what point is trying to be made here. Of course, the Lordstown Motors price is going to be priced in because Workhorse has that stake in the company. Also, I don't believe it's $1 billion just yet. Definitely down the line, yeah, but not right yet. Drones. I personally have no way to even try to value that part of the business, and that's very fair as well. This is something that you may have noticed I haven't done on the channel either. I haven't tried to value in the drones, and I've said this in previous videos. I mean, this is what I would refer to as a short to medium term catalyst, aka 12 to 18 plus months down the line. This could just be another catalyst that will add a lot of money to the company's market cap when it is fully functioning. When we are selling these drones to companies alongside our vehicles, that will be a catalyst. So I do think it's very fair to say you can't value that part of the business now. So what? That just means that it'll get added in later on. I don't think people buy Workhorse stock for the drone technology, in all honesty. I think we all know why people are buying Workhorse stock. So they do say none of the above mentioned items are negative, and I think it's fair, but there was a very clear negative tone. However, none come with anything close to numerical guarantees either. Day trading rules a day. A look at the chart below that shows something that borders on ridiculous. Tiny Workhorse has 82 employees, in the process of hiring 200 more, and more on top of that again. Now, it has recently come out that it could be anywhere between maybe 150 and 250 altogether. I might actually email Steve and try to get clarification on this point because it is quite important to know. But it trades 8 times as many shares per day as UPS or FedEx. I mean, yeah, of course it does. Who cares about UPS or FedEx? I mean, people don't invest in them. People don't day trade them. They don't have the volatility. They don't have the hype behind them. That's what makes a day traded stock. It trades 40 times as many shares as Ryder and about 100 times as many as Hitachi. Astoundingly, Workhorse even has a bigger average trading volume than Facebook. It's Workhorse. It's one of the most exciting companies in the world right now. Of course it's going to be, you know, day traded by a lot of people. That's what makes it so volatile, baby. And this doesn't worry me as a long-term investor. I've said this about EV stocks so many times. They are so manipulated because we've relatively small market caps and a lot of the time relatively small floats and cheap prices. It's easy to manipulate them, you know what I mean? But the thing is, as it becomes a more established company, it'll be okay. So they go on here, valuing this beast. This is not easy, and it's certainly not an exact science, and I agree right off the bat. Respect for even trying to put it into words. Workhorse, like most EV companies, is not currently profitable, and it's not like profits are right around the corner either, because I would rather not rely on the traders who are exchanging 30% of the company's shares on a daily basis. We need to look for better, yet admittedly imperfect methods. Fair. One method could be to look what analysts have to say. I've made my stance on analysts in regards to these startups and EVs quite clear on this channel. There's a few I have respect for, but most of them, they just don't really spend enough time on EV in my opinion. And this here's another thing. Analysts have been changing their price targets as often as most of us change our underwear. I mean, it's so true. Every single day or every single week there is a new price target by the same analyst, and I'm like, What are you even doing? What's the point? And they're all setting price targets that are $26 or $27. I mean, of course that's going to come to fruition. It's not even 10% up from where we are. I would love to see somebody come out with something like ARK invested for Tesla 4 or 5 years down the line. So first, we'll take a look at what collective intelligence of analysts following the stock have to say. According to MarketBeat, the 6 analysts following the stock have an average price target of $17.17, which offers a 37% downside. 6 analysts from MarketBeat. Who cares? The entire team at ARK Invest obviously thinks it can go up a whole lot more. But again, this is just one of those things that, you know, this could scare a lot of people. But when you read 6 analysts, I mean, really think about it, people. It's 6 people. We can also try to project about years out and try to estimate the price to sales. If in 5 years, Workhorse can sell 20,000 vehicles a year, which in my opinion is possible, that would equate to $1 billion in annual sales. You don't know that. First of all, you don't know that. You don't know how much one of these vehicles is going to cost. The average selling price in last mile delivery is $50,000. That does not mean that these vehicles are going to be $50,000. But anyway, applying a price to sales ratio of 2, that would account for a market cap of $2 billion. If you add $0.5 billion from the lower sound stake, you have a market cap of $2.5 billion. If we're speaking 3 years down the line, I think Workhorse is worth far more than $5 billion. And then also keep in mind the royalties we get on the vehicles sold. And also, it is not uncommon for growth stocks to trade above price to sale ratios of 2. Again, this is why I wanted to make this video. Because if you read something like this would be really fair in regards to a blue chip or something of the likes. We're not speaking about blue chips. And again, I actually really respect this author here. I have to admit, they've put everything across really well. I just feel like they're leaning towards one side here, and people who don't know how to think for themselves would not look into it enough. If we want to value Workhorse as a more mature company 5 years out and use price to earnings, we can make a few projections. So I mean, 5 years, right, using the same $1 billion sales estimate, for one I think that's going to be more, whatever. We can apply a profit margin of 7%, which is a little higher than most projections. That would give us projected earnings of about 70 cents a share, applying a PE of 20, right. Applying a PE of 20 right off the bat is ridiculous. We're going to trade above a PE of 20 for 5 years. Don't be ridiculous. Which is about double the long-term average of the biggest automakers. We all know why the biggest automakers trade at such low PE ratios is because nobody cares about them anymore. We would get a share price of $14. Okay, but what if they trade at Tesla's PE ratio of 1,048? 1,048 divided by 20. Okay, so we're speaking about 52.4 times more than the number in this article, which was $14. Okay, so if we were to trade at, you know, Tesla PE ratios, we're looking at a $733 company. Point I'm trying to make is I believe both of these numbers, quite frankly, are ridiculous. Look at the S&P 500 PE ratio as of right now. We're in the high 20s or the 30s, and you are telling me Workhorse will trade at a 20 PE ratio? I mean, come on. So I do see the point that's trying to be made, and respect for trying to put a price target down, because I know how difficult it is, but no, I think that's ridiculous. And this is just another one of those points, guys, where I think you have to be able to speak for yourselves, because if you don't know very much about the industry and you read something like this, applying a PE of 20, which is about double the long-term average of the biggest automakers, that sounds really bad, but we're not speaking about traditional automakers here. So finally, we can take the most optimistic angle and look at the annual addressable market for last mile delivery vehicles. Workhorse estimates that number to be $18 billion. Okay, obviously not all new orders will be electric in 5 years, very fair as well. At the same time, with the Clean Air Act, we could estimate that 15% would be EV, giving us a $2.7 billion niche market. In 5 years, do I think it'll be more than 15%? Honestly, yes, but that's just my word against his. Anything could happen. So they say Workhorse could have half of that business if all goes well. When those numbers get crunched using the PS ratio, you add 0.5 billion, which again, I don't agree with. You get a market cap of 3.2 billion. If you take those numbers and divide by 105 million shares, it will result in a share price 5 years down the line of $30.47. But again, I just think that the ratios that are being used here don't make enough sense in my opinion. Again, lots of respect for this author. I must say this is actually one of the much better Workhorse articles I've seen. But I just wanted to go through this to, you know, show you guys why it's so important to be able to think for yourself and form your own thoughts and opinions and be able to argue with level-headed people. Maybe I'll actually try to get a Workhorse bear on the channel soon. One who, you know, has a bit of self-constraint and we could have a proper chat. I might do that soon. Now, I've been calling out some of the authors on Investor Place for a while now because there really is some absolutely terrible ones. And now I would like to speak about an article that I think is just terrible. How self-serving management can still save Workhorse stock from $0 a share. The struggling electric van maker has ridden a massive wave of investor optimism this summer. Don't let these gains fool you. Workhorse remains the weakest company among all US electric vehicle makers. I really love the fact that there is absolutely loads of facts included to back this very bold statement up. If you ever read something like that and there is literally nothing that follows it, Leave the article. That is ridiculous. Why is it the weakest? What metrics are you using? The company also has some of the worst self-dealing management I have ever encountered in my years of investing. You are wrong. You are straight out wrong. Workhorse stock. A rising tide lifts all boats. That would be fair, except that's not what's happening. EVs are one of the brightest growth industries that I track. Well, okay, some nice words. But great industries can hide some utterly terrible companies, and I don't disagree. I do think there is bad electric vehicle related companies. As investors look for the next Tesla, tremendous and awful companies alike can find themselves awash in cheap financing, keeping even the most unprofitable companies alive, at least temporarily. Workhorse finds itself in the exact same situation. It doesn't. Years of losses and poor management have saddled this company with debt and cash flow issues. We're in fine position cash-wise. I've spoken with the CFO about this. I'm not sure if this man has. If you run the numbers, anybody with half a brain could do it. We're absolutely fine. But the company lives on thanks to wishful thinking. Completely untrue, but anyway. Just for one, that's not how businesses work. Businesses don't work on wishful thinking. The world does not care if you want your business to do well. Your business only does well if you make it. So basically, speaking about how little we've sold lately, and that's fair, we have. And I don't see why that's a big deal. That happens with companies sometimes, okay? In those 4 years, the company lost a total of $96 million and finds itself with $95 million of convertible debt. Convertible debt is fine, they'll deal with it. And in Q2, the company lost another $131 million on a mishandled note conversion. It wasn't a mishandled note conversion, it was a note conversion. Why is the mishandled put in there? Meanwhile, the top two managers took home $8.3 million in salary and stock-based compensation. They're the managers. What do you want me to say here? The stock's price was up over 1,400% on the year. What do you expect them to do? How can they win? Lordstown Motors. No. Lordstown Motors is just a bonus. This isn't how... You know, actually, I can't even look at this article. I am genuinely closing it. Whew. But guys, what I'm trying to say is, don't believe everything that you read. Now look, I'm not trying to say this is a safe company by any means. I've made that clear on the channel so many times. What I am trying to say is I really do like giving both sides of the story. Despite the fact I am a massive bull on the company, I've always admitted that. It is my biggest position for full transparency. I've spoken to the CFO, I've spoken to the CEO of Lordstown Motors, Steve Burns, the founder of Workhorse. But in today's video, I just wanted to make it clear that you don't believe everything you read online. And don't believe anything I tell you. I'm not a financial advisor, I'm a random guy. I want you to listen to what I have to say, but also process it in your own brain and decide, you know what, do I agree with that? Or do I have a counter argument? And either way, it's completely fine, because at the end of the day, I'm just sharing my thoughts on the matter, and I want you to have your own ones. I still feel amazing about Workhorse. I'm very happy that I bought more this week. I'm up to 300 shares now, which is okay. I wish I had more, but I think we're always going to say that. Now, of course, there are loads of good articles out there. In fact, if I bring you over to the news section, there's actually a lot more good articles than bad the last couple of days. But anyway guys, I just wanted to make this video quickly. You know, there's not necessarily any new news. I just wanted to show you guys how I like to look at these articles. You already know we love Workhorse, baby. Boom! So guys, I do hope that you enjoyed today's video. I know it was a little bit different, but hopefully you took some value away from it. If you did watch all the way until the end, I really do appreciate you. You are helping me out so much, my friend. And of course, as always, you, my friend, are a true legend. If you did enjoy, could I please ask you to just gently tap that like button, drop me a comment down below, and subscribe if you're new around here? Because if you don't, Brian will be in your nightmares, and you do not want Brian in your nightmares. And if you are interested, please hit the first link in my description and sign up to become a patron. You will get full access to my buy and sell alerts, new ticker symbols to watch, we have Workhorse chats, we have juicy memes. We literally have everything in there, baby. I still feel the same way I always have about Workhorse, you know what I mean? I am holding this company long. I am not swinging it. I am not in it for a short period of time. I want to hold this company for years and years. And I do understand it carries significant risk in the short term, but I think ultimately in the long term, it's going to be an amazing, truly amazing company. But anyway, guys, I hope you all have an absolutely fantastic day. I will see you for another video later on. Peace.